Good morning and happy Friday. Mark Soderberg with your AM Ag Market updates. Mostly higher, actually higher across the board here. D's corn back above that $4 level for the first time since Tuesday's USDA reports. We've got soybean prices up 7 to 8 cents, meal up about $2 a ton, while bean oil up 35 points. Even wheat has flipped around a little bit now, trading 2 to 3 better in Chicago and in Kansas City. President Trump is meeting later today with Russian leader Putin in Alaska with hopes of negotiating a peace deal for the Russian-Ukraine war. President Trump has vowed that Russia will face significant consequences if a ceasefire is not agreed to. Oil prices will be nervously monitoring developments from today's summit. Oil prices right now down about 40 cents a barrel at $63.60, above the lows this week at $62 a barrel. U.S. weather remains mostly crop-friendly, above normal temperatures. This weekend will gradually give way to normal to below normal readings across the north central, Midwest, and Great Lakes region. For week 2 of the outlook, rains over the next 7 days, again favoring the north central regions of the Midwest, with isolated areas of flooding possible again for areas of Wisconsin. Mother Nature right now is trying to do anything to cool off the brewers. Rest of the Midwest will just see spotty rains at best. U.S. corn and soybean areas in drought remain historically low. Some abnormally dry conditions start to emerge across the northern Delta region. However, it hasn't been dry enough long enough, evidently, to have risen to drought status. Rains in this region are needed to prevent further late-season crop stress. We got NOPA Crush today at 11 o'clock. NOPA members are expected to have processed about 191 million bushels of soybeans last month, which would be a record high for the month, while analysts do also expect a slight build in bean oil stocks. D's corn, as mentioned, back above $4 for the first time since Tuesday. Quite the disparity from the range of estimates on the Brazilian production. USDA held there steady at 132 million metric tons. A little bit surprised by that yet. CONAB raised theirs yesterday to 137, while some private estimates still out there as high as 150 million metric tons. Exactly where their production falls will have a big impact on U.S. demand for the 25-26 marketing year. I've been arguing since Tuesday prices do not have to go significantly lower, particularly if Brazil's production is 135 million metric tons or less. As U.S. corn prices are already the lowest in the global marketplace. Also, ethanol margins are quite strong given the recent drop in corn prices, while cattle prices near record high levels. So I look for this afternoon's CFTC report to show speculators net short about 200,000 contracts. Look for D's to likely chop around between $3.80 and $4.10 until we know a little bit more about this year's crop, whether we do have at least a 188, 189 yield or not. No beans bounced after yesterday's pullback, moving average support just below the market near 1025. Crush margins have also pulled back sharply this week with a much lower than expected acres here in the U.S., while many are still questioning the even lower USDA export forecast as a potential U.S.-China trade deal has been kicked back to this fall. SEP oil did hold technical support above a late June low at 51.59 overnight, setting up a little bit of a bounce here. SEP meal inside trading day overnight, perhaps carving out a near-term trading range between 280 and 290. Speculators have been lighting up on what was a record short position. Wheat prices so far have not been able to mount much of a bounce, but at least so far we've been holding above the $5 level in both Kansas City and Chicago futures. Western Australia did raise their production forecast 2 million metric tons to 11.5 million metric tons due to favorable growing conditions there. Thanks for listening, everyone. Have a great Friday and have a great weekend.